First of all, if the IRS thinks you're filing an offer in compromise just to delay collection action, they will automatically summarily reject it or return it and not even accept it. So always make sure that you're submitting an offer compromise that at least has a much better than 50-50 chance of being accepted. There's 3 ways you can do an offer in compromise. At least 80% of the way people do an offer in compromise is under the doubt as to collectability criteria. Basically, you owe an amount of money to the IRS, and through what you can prove in your financial situation, you're basically saying, I can't afford to pay you. Even if I try, you're never going to collect the full amount. Therefore, please take what I'm offering you to settle my debt in full. And you will have to prove that you cannot pay the amount you owe. If there's any way that you could pay it in full, or the IRS believes you can pay it in full, they will not accept an offer in compromise. The other way you can do an offer in compromise is doubt as to liability, meaning there is some question that you owe the money. In that case, you do not have to provide financial statements. You just have to provide the case as to why you think you don't owe the money. If you file the tax return and don't pay it, you don't qualify for a doubt as to liability. You owe the money. You filed the taxes. There's no question that you owe the money. Third, and the very little used, is called effective tax administration. Basically, in that case, you'd have to prove the offer in compromise. You will have to provide a financial statement. And even if it shows that you can pay the tax, you have to prove that it would be unfair and unequitable for you to have to pay these taxes. Those are very infrequently used, and usually only special circumstances will qualify there. The reason you do not want to file an offer in compromise haphazardly is because it extends the statute of limitations. And let's say you think you're making a decent offer. If it turns out that that offer is not a good offer, it extends the statute of limitations. And you never want to extend the statute of limitations with the IRS if you don't have to. These days, an offer in compromise is taking close to a year for them even to look at it. So by the time you're having one accepted or rejected is usually taking anywhere from a year to a year and 6 months. On top of that, they add an additional 6 months to the statute of limitations. So if it takes a year and a half for the offer in compromise to ultimately be rejected, you've just added 2 years to the statute of limitations for them to collect the money, meaning it's much more likely now that they're going to collect it. Also, in the interim, if you've paid no money towards the liability, at a minimum, you're probably growing at 7 to 8% for that 2 years. So we urge you to contact a professional, have them help you, and have them evaluate whether or not you qualify for an offer in compromise.